So we read, it says, on 1st of April 2021, Riziki Limited acquired 75% of the equity shares of Salama Limited, when the retained earnings of Salama Limited stood at what price? 234 million. The acquisition consideration consisted of cash amounting to shillings 510 million and share exchange on the basis of 2 ordinary shares of Riziki Limited for every 3 ordinary shares acquired in Salama Limited. So these people, they gave cash. Then apart from giving cash to acquire, they also gave shares. You can acquire through cash and or even shares. There's no problem with that. So they were giving them 2 for every, how many shares acquired? 3. But they acquired what percentage of shares in that company? 75%. So I can even kick off from there, by the way, to know shares start. Shares issued by Riziki to acquire Salama. So they were issuing on what basis? They were giving out 2 for every 3. Sure. They were giving 2 for every 3. But how many shares were in Salama? Can you check the balance sheet? The balance sheet of Salama. That balance sheet down there. Ordinary share capital. Using ordinary share capital of shillings 10 per value. In Salama, using 300,000. So you take shillings 300,000 divided by per value. Per value is 10. So how many shares did they issue to acquire? They gave 2 for every 3. No, sorry. You know, they never acquired everything. They acquired what percentage of shares? 75. Yes. They took 75% of this. Then of what they acquired, they issued 2 for every 3. So how many shares did they acquire? 2,000. 15,000. So this is 15,000. Therefore, the value of shares acquired So value of shares acquired, you take 15 times. They issued at what price? They were issued at what price? We continue reading. The market value of Riziki Limited shares is how much? 16. So what is 15 times 16? 40,000. So the shares they gave out is 240. Now, no problem. We continue. So their balance sheet is as your eyes is capable of seeing. You can see the balance sheet how it is. Additional information. The fair value of Salama Limited's net assets approximated their carrying amount, with exemption of a specialized piece of equipment which had a fair value of 120 million. in excess of its carrying amount. This equipment had a 10-year remaining useful life. So that is what you call, we're just collecting evidence. That is what you call fair value what? We were giving it what name? Fair value uplift. So your evaluation, fair value uplift, stock revaluation. They have said it is how much? 120 million, so that is 120,000. Then it had a useful life for how many years? 10 years. So depreciation. So depreciation, you will take 120 divided by 10 years. So depreciation per year is how much? 12. They will help us ahead. Is that okay? Let's go to number 2. Let us go to number 2. Number 2, it is the group's policy to value the non-controlling interest at fair value on acquisition. The fair value of the non-controlling interest in Salama was estimated at how much? 144. It is now time to calculate goodwill. Yes, let's calculate goodwill. Let's calculate goodwill. Let's calculate goodwill. So goodwill, you take the purchase consideration. Purchase consideration. Purchase consideration for the parent, there is one they pay the cash immediately. So there. How much was the immediate cash? 510. Eh? So immediate cash was 510. Then shares. Shares, we have seen that they gave out shares worth how much? 240. Then noisemakers, you bring their fair value. So fair value of NCI. So fair value of NCI, they have said is how much? 144. 144. Can you add this? Then we subtract net assets. How much is that? 894. And down there you say less net assets acquired. So you proceed. So you say less net assets acquired. So net assets, we say those are the equity components. Sure. So equity components, you take ordinary share capital. Ordinary share capital. How much is the ordinary share capital of Salama? 300, correct? Bring it in somehow first column. You can create a first column for yourself. Notice the far end. Then retained earnings. Retained earnings, I say we always use on the retained earnings on the date of acquisition because goodwill is computed on acquisition. How much was the retained earnings on the date we acquired Salama? Check where the question started. Where the question started? 234. Then on the same page, there was the fair value uplift, which we are calling revaluation. Revaluation is also reserved to be considered. Revaluation was how much? 120. So these are the only net assets we have in this question. The one which is missing, which is, they are normally four. They are always following each other in four. Ordinary retained earnings, revaluation, share premium. But premium is not there. So you pick the ones which are there. And you need to know them. They are this one's actually. So premium is the one missing there. So that plus that, you get how much? $654. 654. So you less 654, and the difference you get is what? So you don't take the percentage because it is full method. Sure. Yes. So 894 minus this will give us goodwill. So how much is goodwill? The difference? 240. Don't close, maybe there is impairment ahead. I would really want to check with whether there is impairment. So just leave it hanging. Don't close down there. Is that okay? So, let's proceed. We are proceeding to note number 5. But before note 5, let's just check note 5 kidogo. Note 5 so that we finish the goodwill issue. Impairment test performed on this revealed that the investment in Amua is something different. Amua Limited had been impaired by 5 due to this. However, no impairment was required in respect of goodwill arising on acquisition of Salama. So there is no impairment for Salama. So Salama rests there. So we have computed goodwill in Salama. Are we okay? Yes. Let's go to note number 3. Let's go to note 3. During the year, Salama sold goods to Riziki for 64, earning a gross profit margin of 25%. Already you know where they are headed, sure. Riziki still held 48 worth of these goods in the inventory. That one is leading us to unrealized what? Profits. So calculate UPI. UPI, you take profit margin. This one they say 25% on what? On sales. When they say on sales, that is margin. If they say on cost, that is markup. That is when you convert. So this one you don't convert, that is margin. Profit on sale is margin. Are we together? Yes. So you just take 25%. You multiply with the value of the goods which remained unsold. How much remained unsold? 40? 48. They have said 48 worth of these goods still remain. So 25% of 48 is how much, students? That is 12. So unrealized profit is 12. We continue reading. Salama Limited still had the full invoice value of 64 in the trade receivables. However, Riziki Limited trade payables only showed how much? 34 million, as it had made a payment of 30. So in the books, there is this one claiming how much? 64. The other side is claiming no. What I'm supposed to pay is how much? Or let me leave you to read that sentence. Can you read that sentence? Read that sentence. Read that sentence. You've understood? So there is one in the receivables, they expect to receive 64. This other side, they are saying no. What we are supposed to pay is 30 what? 34. So there's a difference of 30. And I told you, whenever there is a difference, variation in intergroup debts, that variation represents cash in what? Transit. So here there is intergroup debt, The correct debt is 34. The correct debt is 34, which, how will I account for the 34? You subtract from receivables. You subtract from where? From payables. Then there is cash in what? Have you seen the cash in transit? How much is in transit? 30, that difference. So the 30 already had been paid. The other person, that is why you see this plus this is 64. So the correct balance is 34, but there is cash in transit of 30. So how do we adjust for the 30? It is a plus to the cash book, then a minus to receivables. That is how you will account for it during consolidation. Umeelewa? Hapo umeelewa? Because it's one of the easiest things to get in the question. That this one is saying I'm supposed to receive 60 what? 64. Then in the payables of the other group members, they have indicated how much? 34. Even they are fair. They are fair to tell us about the 30. In most cases, they will not mention that 30. They just tell you in the books of this receivable was 64, while in the other book it was 34. They keep quiet. So I say, whenever, Jen, I'm repeating, whenever there is that variation in the intergroup debts, then that variation represents what? Cash. It means the other side has already done what? Paid. You see, they are saying in the books of who? Salama Limited still had the full invoice value of 64 in trade receivable. You know, Salama is the one who sold. So in their books, they were still expecting an amount of how much? They were still expecting 64. However, the other side, Riziki Limited trade payables, you know, these ones are expecting to receive and the other side is expected to pay. In the trade payables, only showed how much? 34 million. So that's what I'm saying. Even at that stage, they should just have a full stop. But they've even gone ahead to say it had made a payment of 30. So intergroup debt is 34, the correct balance, because it was 64, but the other side had already paid how much? 30. So it means the debt which should be claimed is 34. But intergroup debt, you subtract, because there is no debt. These are family members. Their debt will not take during consolidation. So you subtract the debt from receivable, you also subtract from payables. The same amount. You subtract in payables, you subtract from receivables. In transit is now that difference. That one you need to add it back to the cash book, then you subtract what they are expected to receive. Jane, I hope now you've understood. All right, now let's go to the next. Next note is note number 4. On 1st April, Riziki Limited acquired 30% equity interest in Amua. Before I proceed, acquiring 30%, that one makes that Amua to be what in the group? Subsidiary, associate, joint venture. Parents acquired 30%. That one makes Amua to be 30% qualifies an investee company to be senior associate. I don't know where you go wrong. What happened? Yes, so that is associates. 30% is an associate. But you promise this weekend you're going to show that book. Associate, yes, let's not joke with it. So 30% is associate. Associate starts from 20 to 49. Then in the notes I gave you, and which we discussed, 50% is joint venture. We don't consolidate anything 50% and below. Exactly 50, because you lack control. There is no control. Control exists when you have what percentage? 51 and above. So 50% and below, you don't have control, and therefore you're not supposed to consolidate for that company. But your investment, no matter how little it is, you know, if you invest, for example, in Kenya Airways, even if you have invested 30,000, in your books, that is your what? Investment. So in your investment, you're allowed to, but all other expenses, assets, you're not supposed to consolidate for. So on 1st April, Riziki also acquired 30% of Amua for 65 million in cash. Amua Limited sustained heavy losses over the last few years, and Riziki Limited hoped it will turn it around through its significant influence of Amua Limited. In the year that this, Amua Limited made a loss of 150. Stop. They acquired a company which is already dwindling, dwindling. That hoping God will work ways. But in that year they acquired Amua. Amua made a loss of how much? 150 million. That's serious. Imagine you acquire a company and they make a loss of 150 million. The owner told you, you just acquire, but no, we have been posting losses. Then you tell them God will work ways. Then after 1 year, a loss of 150 million. And if you try to complain, check number 5. If you complain, they tell you, impairment test performed revealed that the investment in Amua had been impaired by how much? 5 million. That is when you start saying business is very difficult, dangerous. So I want you to work for me something in that note. You say investment in Amua. Investment in Amua, which is associates. Amua in bracket associate. I don't have space. Investment in Amua, which is associates. So you are not supposed to consolidate for them, but your investment you take in the books. So come here and say initial investment. How much did they invest in that company? 60? 65. They invested 65. Then, just after that 1 year, that company made a loss. So less post-acquisition loss. Post-acquisition Loss, if it is profit you earn, they made a loss of how much? 150. So you take 150, but we cannot take everything for them. We only acquired what percentage? 30. So we only suffer 30% of that loss. So what is 150 times 30? Huh? 45. Then we are told our investment was impaired. Impaired means it lost value. By how much? The last note. Less impairment. It lost value by 5 million. So currently, our investment, the current investment in that company is this much. How much? 15. Imagine you have invested in a company 65 million. Then exactly after 1 year, if you want to withdraw your investment out, they can only give you 15. That is the interpretation here. Will you accept? You took 65 million. Exactly after 1 year, they tell you, you want to move out? Yes, okay. Let's do some small calculations behind the tent. We are coming back. Then they come with you, they have stamped due for a home, 15 million. After 1 year, you tell them, I'm not here for jokes. I want my money. So 15. Let's go to required. Let's go to required. So what is required, Roman 1? Determine, determine the value of investment in Amua. 3 marks, this one here. So how are you have even captured it as workings. Now it is, where you have written one, right, it required A. We can't repeat, sure. Already we have it. So we have already done that one. Very good. Let's go to Roman 2. Calculate the value of goodwill and acquisition of Salama. We have it, and we are not repeating. We have already calculated goodwill. So goodwill is here. So that one also we have done. Oh, I never knew we could have captured them in the presentation, not as workings. Then now we are required to prepare finally consolidated statement of financial position. So we have moved. So balance sheet, what is going to bring us issue there? Retained earnings and NCI only. So there are 2 elements which are going to disturb us there. But before we do them, retained earnings and NCI, let me give you 2 minutes. Please check what we have done. If there is anywhere you have a question, you let me know. Before we do the 2 workings, then we do now the presentation. Just go through this, which we have done up to investment, goodwill, all those elements. I don't want a scenario where you just write because writing is there to be written. You should write because you have understood what you are writing. So just counter check. There is no hurry in Africa. If you have a hurry, that's your own problem. Oh, so online at least they have discussed until now they are okay. Now I want us to do two workings, then we can do presentation, retained earnings and NCI. Let's start with the NCI. They are going to make a start there. So I want us to know the capital, the equity of minority. So right there, NCI's equity. So NCI's equity, what was their fair value on acquisition? Fair value on the date of acquisition. Fair value on the date of acquisition. What was the fair value of minority note 2? 144. Then you add post acquisition profits. Post acquisition profit of Salama. So the profit Salama will make after acquisition, minority, you will give them what percentage? 25, because parent is controlling 75. So minority will get 25%. So how do you get the post acquisition? Take the profit in the retained earnings in the balance sheet. Check retained earnings in the balance sheet. How much? Of Salama? 358. Minus, what was the profit on the date they were acquired? That is the post. The date they were acquired, retained earnings of Salama. You see 234. When Salama was acquired, their retained earnings, paragraph 2 of the question. When Salama was acquired, their profit was 234. So get that difference to take 25%, then help me with that answer. Hmm? 120.
21.
25% of the difference, 31,000. Then you less, there was unrealized profits. Unrealized profit because Salama is the one who sold. So the profit of Salama will be affected. Unrealized profit, UPI, we got how much? Was it 12? UPI was 12. So they will be responsible for 25%. So give me 25% of 12. 3. Come on. 3. Even depreciation will affect their profits. Depreciation, 25%. Depreciation was also 12. So 3. Then there was no impairment. They never had impairment. So there is nothing like impairment to be subtracted. So that is all. So how much do you get as the NCI? Hmm? 169. I want us to get retained earnings. So retained earnings So retained earnings, check for parents. You know now this one we are preparing at the end of the year. So check for Riziki. Riziki retained earnings is how much in the balance sheet? Just check their balance sheet. 743,400. I hope everyone sees that. Then for subsidiary, you take this post acquisition, but you see NCI has taken what percentage? 25. So the parent will take 75. So you bring here Salama, you take 75% of 358 minus 234. Because minority took 25, so parent will take what is remaining. Okay. 93. You less UPI. No, even before I go to UPI, okay, it's fine. UPI 75% of 12. UPI 75% of 12. 9. So that is 9. Depreciation also 75. Minority went with 25. So depreciation 75 of 12. That is also 9. Then this other company, Amua, they made a loss of 100 and what? No, it was they made a loss of 150. So of that 150, less loss in Amua. It was 150. Parent is responsible for what percentage? 75% of that profit. So 75% of that profit will be how much? Hmm? 112,500. Then finally, there was impairment. Impairment loss. Impairment loss was 5. That one parent suffered alone. Its investment was impaired. So make that adjustment. Only that. So can you adjust? Investment will not come to the profit. You know, we are dealing with profit, in which case if this was profit, we add. Not investment will go to the assets up there. This is retained earnings. So retained earnings is affected by the profits. Oh, thank you. Stanley, here, I don't know why. It should be 30%, thank you. We were used to 75, thank you. It would have brought us a lot of problems ahead. This is 40, 45. We were only having 30%, not 75. 75 is in Salama. Thank you for that. So adjust and tell me what you are getting. You get 768, 400. Thank you. We can now do presentation. We can do presentation. Of the balance sheet. Those things which you are seeing difficult, let them not worry you much. Stay pressure free. Yeah? I write there. What is the name of the parent? The parent is called Riziki. So right there, Riziki Group. Riziki Group. Consolidated. They want consolidated what? As at when? $20, $22. Shillings are in thousands. I have that one there. So these things are not hard. What makes people scared are bad things like NCI and retained earnings, which can even make your life easy. Even no students get them in exam. So I wonder why you are going to exam to do retained earnings and you will not get it. And even the entire people who have sat for exam, including those who are marking, can fail to get them. So why are you struggling? There are so many things here which you will get by the way. Let's see. So let's start. Non-current what? Non-current assets. So the first one is property, plant, and equipment. Just write PP. Property, plant, and equipment. We add what plus what? 1595, 300 plus 636, 400. Plus there was fair value uplift, the revaluation. You remember revaluation? It was how much? 120. And it was being depreciated 12.
But previous question it was below. This one is in excess of.
You see, there's no difference if they say that fair value, even I told you one day, I think, fair value is in excess of carrying amount, and the carrying amount is below fair value. You know, those things are the same. Your brother is called who? You're just assuming you're my brother. Huh? No, let's say you are James and your brother is John. James is older than John. That is one. John is younger than James. Is there a difference? It's one and the same. Right? You are older than your brother. Your brother is younger than you. It's the same thing. So they are just, they like using that to convince students, because there's a group of students, when they have seen less, they think that is below. No. Carrying up, you know, revaluation surplus arises when the market value is more. So fair value being more than carrying amount, or carrying amount being less than fair value, is one and the same. Sure. So there was how much? But then, will you understand if I do this? Not 9 over 10, not 12. Will you understand if I do that? You don't understand? Okay. It was 120. Then we were depreciating 10 years. So we divided by 10. So it means we have depreciated it for 1 year. So you can come here and say 120 minus 12, or you just say 120 times. You know, we have depreciated 1 year. So the remaining value is 9. You understand? So you can go whichever way you want. So if you write this, the person who will copy your book, be ready to explain. 9 over 12, because we have depreciated 1 year. Or there's no problem, you can just say 120 minus 120 over 10. So it's still okay. Whichever way you follow, no problem. Provided you have understood, give me the answer. I'm waiting for the answer. 20? 23, 39, 700. I want one person to confirm. Can someone confirm online if that is the answer we are getting before we decide to proceed? Yeah, Mercy has the same, so we proceed. Next, investments. So we have investments in the companies. You be careful. What you invested in the subsidiary, you replace it with goodwill. So for subsidiary, give us goodwill. How much was goodwill in Salama? It was 240. Yeah, I remember something like that. Goodwill was 240. Sure. Yes. Then in they're calling themselves Amua. You come here and say investment in associates. The one we adjusted, what did we get? Investment in associates, 15,000. To make 15. Stop. Can you add? How much do you get? 2594. 2594. 700. Current assets. Inventory. Can you add 165 plus 160? What do we subtract? Which I told you. What do we subtract from stock? UPI. Very good. Can you clap? You clap. Yes, we subtract UPI. UPI, I remember it was 12. Sure. Yeah, UPI was 12. So for inventory, always subtract UPI. And I'm convinced everyone here right now knows how to calculate UPI. So this plus this minus UPI, what do you get? Huh? 13. Next, receivables. Receivables, you add 247, 100 plus 107, 800 minus intergroup debts. The correct debt, you remember, was 34. Was 34. Then there was cash in what? Transit. So when you have been sent money, you need to reduce what you expect to receive. So minus 30. 34 was the intergroup debt. 30 was the cash in transit. Once you have been sent money, you need to reduce your receivable. So take this plus this and indicate in your books, this is intergroup debt, this is cash in transit. How much do you get? 90? 900. Is that small? Then bank. Bank. So bank, we take 21. We top up 13.8. What do you want us to add? CIT. CIT is the cash in transit. How much was in transit? 30. So you add it to the bank. So that is 30. You have already sent a check. So consolidate for that. How much do you get? 64,800. Can you add total assets? Total assets, kindly add So total assets, honorable members, comes to how much? 32. Confirm. Good. Equity and liabilities. So we go to equity and liabilities. Equity and liabilities. So equity and liabilities, ordinary share capital. Ordinary share capital. What did I tell you? You take parent only. Sure. But in this question, students who just went and took 850 must have failed. Because there are some shares parent gave out. You remember they were giving it 2 for every 3. Yes, so fine. You still consider for parent 850, but top up the shares which parent gave to acquire that company. Check for me, they gave out how many shares? 15, 51, 50, something 50. Is the first thing we did in our workings. 15,000. Eh? So those were shares. So 15,000, but you multiply by the par value. Par value of ordinary share capital is 10. Don't multiply by 16. Share capital account, you don't exceed the par value. I hope you are seeing the par value of the ordinary share capital. So shillings 10. You don't exceed. I'll tell you, though they gave them at 16, I'll tell you where we are taking the excess of 6. So that would be 150. 150 plus 850 should be 1 million. If someone gives 1 million right now, will you still come here in the afternoon to reply? Right now, then you come in the afternoon. In cash in your pocket.
No.
You will start. Investors are talking. Alright, so 1 million. Then now, you know these people, and I want you to understand this. They gave out 15,000 shares. At what price? 16. The rule of accounting, share capital account, you don't exceed the par value. So if they give in excess, then that excess amount, you open another account called share premium. The amount which is over and above the par value, we post it in the share premium account. So come out with share premium, even though it was not there initially. Share premium 15, but now this time around we multiply by what price? 6. The excess amount. Remember they gave 15 and 16, but in rule of accounting, share capital account, we record the nominal. You don't exceed. Then the excess, you open a different account called share premium account. Correct. How much? 90. Let's proceed. Retained earnings. Retained earnings. Retained earnings, we have calculated, we have it there. This one here, the one we determined here. 768, 400. Then NCI, non-controlling interest, 169. NCI we have calculated there, 169 only. Can you add? 2027. 2027. 400. Non-current liabilities. Non-current liabilities. Non-current liabilities, where are they? It's only one, eh? 8% what? 8% redeemable. Preference share capital. I'm tired of writing all those things. 460 plus 40. That's what I know. That is 500. But if you're given 1 million right now, you stop UPI until further notice. 1 million can even 1 month. Zile groups unaitishwa pesa, you just pay. Then current liabilities, we are almost done. I want to proceed this side. Current liabilities, you continue down there. Current liabilities, we have payables. Payables, you consider 442 plus 167 minus. You remember the intergroup debts? Intergroup debts, we said you subtract from receivable and payable. It was how much? 34, yes. It was 34. So can you adjust that? The problem, what does 1 million contain the life of someone? Still 1 million contain a life of someone. If you invest it wisely, it's cost first. How much is that? 575. 575, 200. 575, 200. Current tax, C tax. Current tax, I'm seeing there 108 plus 52, 800. There is nothing to adjust. Can you add those two? How much? 160, 800. Total equity and liabilities. So take 2027 plus the 5 plus that plus that. What do you get? Are we in order? In order means 32, 63, 1. So my question has always been, can you just get 0 here that you cannot even try? Oh, let's be honest, the way I know you, will you fail to try this? You will. By the time we are finishing, I know you will be able to get this, you'll be able to get this without struggling. So I'm checking this question in particular. I know people will get this one. Here there was some shake. And what you are not getting, everybody should not get. Others should not get, so there's no problem. By the time we are finishing, I know you will get this. Even this one, I know you will get. Those ones I know you will get without problems. Even this one, I know you will get by the time we are finishing. So without struggling, you will get 1, 2, 3, 4, 5, 6, 7. How many marks were being allocated for that question? 8 marks. So if it is bad, if people are failing, they will say any 4 times 2. If people are passing moderately, then they say any 1 times 1. So 8 takes 8 marks. So if worse for worse, you can easily get 7 over what? 8. Then the goodwill, the investment, even if you are not getting everything, you can get something small. So you can even just get a 0. It's impossible unless you have a problem. Problem means maybe you are sick that day. You know, when you're sick, that is now something different. But if you're just well composed, you will get, and the group is coming. Next question. Yeah, it is coming. Next question, November 2017. I have reasons why I'm bringing that. November 2017, question 2. Then I'll come back to 2020 again. 2021. November 2017. November 2017, question 2B. November 2017, question 2B. Correct. So we have 15 minutes to the class end. Do you think we can do this thing within 15 minutes? No. That is the question I want us to do with the early morning class at 4. So I want to give you time. I'm not even giving you, I'm giving you time. I have 2 people to give time. Those people who have not read the group, you are just doing the questions. That is very dangerous for your consumption. Make sure you read the notes first. You understand how do we calculate UPI? How do you calculate goodwill? What is associate? What is a joint venture? How do we treat them in consolidation? Then from there, you can even try this question. So if you are read, you can comfortably try the question, then you see how it will be done. My objective is not that you do and get it correct. Go wrong, then when we do it, you see where you went wrong. When custom misbehaves and brings something of the same nature, you pass with it. So can we agree on that? Yes. So you can take lunch. We shall meet at 4 p.m. Yes, 4 p.m. Thank you.